test. Okay, today is February 9th, 2026, currently 8:28 a.m. So right now we are looking at the E-mini S&P March 2026 contract. We'll start at the weekly time frame. So start off the analysis here. We should be, I'm looking at where these large gaps are formed. So the settlement differences. So this is a new week. Gap created on the weekly. So you want to mark those. And this is for the week of actually the open is down here. We're going to look at these wicks. We're just measuring out 50%. So last week we had this large candle that closed almost unchanged, a little bit of a little bit up. So we just had our 8:30 open. Jeez. Why? I want to redo that. It's not to my standard. I want to be able to extend this. keep spelling it wrong. So down here, these orange lines, those are the halted trading hours from the CME cooling issue, which sounds like a load of BS, in my opinion. Okay, so now that we looked at the weekly, we're going to do our 3-day look backs. That'll be candle 1, candle 2, candle 3. And this is the new printing candle, so we are not giving that all of our attention. So we already took out the high. It's not. So I think it's important to note this suspension block. I think I should be highlighting the entire thing, but even besides a little, we will mark it out. Outside of that, I know that we have a lot of new day opening gaps up in this area. Let's go to regular trading hours. So there's our regular trading hours high. That and that. I want to mark this out too, but we will make that a different color. Shit. So there's a volume imbalance. So right now we're going to be looking lower because we already took out that 3-day high. I also want this to be marked out. So that's a premium wick area. It's overlapping PD array. So I have that in balance up there. That's regular trading. But so where did we close? This was our closing price from Friday. So we're gonna start that. And where are we trading right now? Right around the same area. Here's a new week opening gap as well for this week. So that'll be February 9th. New week opening gap. High. So we've had a lot of crazy things going on in across the markets, and we should be anticipating. Well, we already see the higher volatility, but you know, crazy things can happen from here on out. So we have to not be surprised by things as they present themselves. It might be difficult, but I can see the tension. There's all kinds of things, probably larger overnight ranges. With the metals markets having these swings, Bitcoin dropping, really anything can happen in these times. So we're gonna take the leverage down. I should have my account funded in the next couple days, probably starting Wednesday, and I could trade micros and go from there. So yeah, so we will go from there. 8:30. What happened? Not much in the ES. Yeah, not a ton going on here. Check out the dollar. keep that in mind. Mark out this gap. So our last 3-day range, we have here, here, and here. There's an imbalance. Keep that in mind. You can see it jump down to this midpoint of the weekly wick. Oil. Let me see what this was tied to. Let's get rid of it all. So we had this, which we were respecting. But our last 3 days look like this. That's our range. I personally think that this is a false rebound. And it's not that we can't take out those highs. We might want to take out any short positions that came off of this drop and this break of this low. But ultimately, I think that down in kind of this area, this volume imbalance, could dig deeper into there. NASDAQ did it. Let's go there. So on here we will be looking at this. Just see how this holds. Another one up here. The last 3 days includes that high, this low. this low. So we have this inversion area. That was tapped into right here. So from this candle's low to this third candle's high, draw that out. See how it compares. So right around the same area, more refined. This area. So yeah, we will leave it at that for now. We're about to approach 9 o'clock. I think we'll see lower prices after like a run up. We could see a run up into this. Maybe when I take out these regular trading hours, if not all-time highs, but ultimately lower is the bias. Crude oil, the macro play, it's just if anything picks up, we'll see extremely high prices. Talking up to this area. In the 130s to 50s. Maybe a drop in the dollar to around this area. Because these are pretty much some relative equal lows, like right here. So yeah, I'd expect acceleration back down into this range. Since these highs were taken out. NQ maybe a push up to these highs, but not necessarily required. Get these highs up here, I think that's pretty interesting. But we'll just have to wait and see. Check more information. So I'm going to close it down there, and I will check back in hopefully tomorrow. All right, be safe. God bless.